Disney just cut its dividend. Ladies and gentlemen, today I asked the age-old question, what do you do when your favorite stock cuts its dividend? Do you sell? Do you cost average down? I'm going to answer all of those questions today on Passive Income Investor, corn streaming in the forest. Slap a like and let's jump right into this.
Drop it.
Well, welcome back, my passive income investors. With first quarter earnings finally out of the way, we're getting a feel for these new market conditions we live in thanks to this pandemic. And many of us dividend and value investors are finally starting to question our philosophies and strategies behind our portfolio as companies like Disney, our world-beloved companies, Walt Disney, slashes its dividend to try and save money, as it's just one of these companies that is not going to do well in this new world condition. And a lot of people are probably wondering to themselves, if they hold that stock, should they sell it? And if I can leave you with a question, you got to kind of figure out this for yourself. But what is your long-term investment strategy? Now, speaking for my own investment strategy, because I'm not a financial advisor, I can only tell you what I would do if I was holding Disney stock. And in my portfolio, I've kind of got two classes of companies, my growth companies and my dividend companies. Now, let's talk about the dividend companies first. I expect those companies to continue paying dividends in hopes that they grow them or they stay flat, so I can have access to them at any given time in my life, whether I'm financially free, retired, or not, because that is why I am building a dividend stock portfolio. It's just to have access to extra cash flow whenever I need it. And if I was holding a company like Disney in that part of my portfolio, well, in my personal opinion, I would just sell it. I wouldn't even waste my time. I know a lot of people out there like PPCN are holding it for their kids in the long term. And if that's your perspective on it and you're holding it kind of for a long-term growth company and you expect us to come out on the other side of this doing just fine, then don't worry about it. Hold your Disney stock. But if you're out there trying to invest in these current market conditions, you really have to start separating your investment classes, because as a value dividend investor, obviously I'm digging in for any kind of value sector I find, like financials with all those banks just being down 30, 40, some of them even at 50% with something like a Wells Fargo. And then we also have like our REITs that I'm constantly buying into, like my RioCan, and constantly analyzing Realty Income. But what you have to recognize, guys, is you can't just be throwing all your money at those stocks, because we don't know how they're going to perform, and they could keep downtrending in this specific market condition. So it's always important to get those breadwinners, those companies that we know are going to just be fine through all of this. And a lot of people keep turning their heads away from them, but obviously we're talking about companies like Amazon, Microsoft, Apple, Google. I mean, the Johnson & Johnson guys. Heck, you could even buy Shopify. Like, these are just no brain dead investments that you know are going to do well, especially now that we've been able to analyze those first quarterly earnings. And you have to have these in your portfolio. And I know a lot of us want to chase those yields. Heck, I've been investing for a lot of my family and my girlfriend, and I have been pretty much forced buying them into companies like Facebook. And it's important to separate that class in your portfolio, because you need to constantly be kind of doing both. Now, you have to recognize, just because you're buying dividend stocks, it doesn't mean you're going to get growth out of your portfolio, which is why it's always so damn important to have these really awesome companies for the long term, for that long outlook. Maybe 5-10 years from now, you can scale them down and really increase your dividend holdings. So if you're somebody that's really concerned about the market, you don't know what to buy, you're scared of these high yielding stocks that might be traps, even though the world renowned companies, again, like Disney stock cutting its dividend, you really have to sit down and ask yourself one serious question, guys, especially if you're fearful of the market we're currently sitting in. And that is, what do you think things are going to look like a year or two from now? Do you think people are going to be going back to gyms, cineplexes, theaters? You think they're going to be going back to restaurants and clubbing with their friends? I mean, if that's a reality that you think will go back, I mean, don't hesitate on buying and holding these companies, or even picking up discounts with something like Disney if you want to kind of get those value stocks. And this is just the new face of reality in the circumstances we live in, where investors don't care about fundamentals anymore, guys. They care about the current circumstances and can a company perform through this. They don't even care if there's a light at the end of the tunnel, if we come out on the other side of this. A lot of people are running around with their tinfoil hats on, saying they're experiencing a whole kind of sociological shift, guys, where nobody's going to go out again. People are going to get used to working out at home. We're all going to kind of become hermits in our house, and no one's going to go back to their retail office space, because they just realized, why do we have this when our employees can work from home? I mean, that is the reality that we're kind of getting shoved down our throats. But it's a reality to an extent that is going to stick. Don't get me wrong. We're going to see some changes in some companies here, guys. But in the same notion, I don't think it's going to be the full extent of it, because nobody wants to stay in their homes anymore. We all want to get out. So it's trying to figure out where that middle ground is. I'm always a glass half full kind of a dude. I'm very optimistic if you can't tell. So I'm going to be cost averaging into those incredible value stocks that will come out on the other side of this with maybe a little bit of damage, but not as much damage as their stocks are down right now. And you guys only have to follow this channel to figure out what those are. So consider slapping a like and subscribing. But I'd love to know, what do you guys think in that comments section below? I'm continuing my social distance endeavors to try and stay healthy, get a little bit of sun, getting a little lonely out here. The only thing I have still is the dogs floating around the field. Stay cool, stay awesome, and I look forward to chatting to you guys tomorrow.